Good morning, everyone. The slogan for the day seems to be, what, me worry? Sequestration begins today. Estimates are that it'll cut about 0.5 percentage point off of U.S. growth if it's fully implemented. Yet, the dollar was up against almost every major currency overnight. Greater than expected fall in the weekly jobless claims number and a rise in the M&I Chicago report business barometer showed that the U.S. economy is doing okay right now, and probably the market thinks that somehow the government will find a way to kick the can down the road a bit further, as they have so far with every deadline. Meanwhile, Italian bond spreads over Germany came in by 8 basis points yesterday, and Italian stocks were up 0.6%, showing that fears about Italy are receding too. So it looks like all is well in the world, risk is fading, and it's back to the races. That means borrowing more yen and investing in U.S. stocks, sending dollar-yen higher. The usual end-of-month data dump from Japan last night confirmed the poor state of the Japanese economy. Auto sales continue to decline, around 12% year-on-year. Core CPI has been down year-on-year for 8 months out of 9. There's not much improvement in the employment picture, and disposable incomes are down. The picture confirms that Prime Minister Abe's new crew at the Bank of Japan will really have their work cut out for them when they start work later this month. I expect that they'll come up with more easing measures as early as their first policy board meeting in the beginning of April, and dollar-yen should head higher. The pair seems to be on an uptrend again, guided by a former short-lived trend line. With the 92.7 target met, we're looking for 93.4 today in dollar-yen. Support is likely to come in at 91.6. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.